We have our first corporate that's joining. We'll come back to chat with you. Galaxy Surfactants, well, they reported a good set of numbers. Revenues jumped up by 40%. The margins as well expanded on a year-on-year basis. The company, however, saw quite a bit of a contraction in the profits and margins on a sequential basis. Mr. Shekhar, the founder, promoter, and managing director at the company, joins us. Good morning, Mr. Shekhar, and congratulations on a pretty good showing.
Good morning.
I had two questions for you. One is on your EBITDA per ton. Now, every time you join us, you talk about 16 to around 18,000 odd. You did close to 22,000. Now, given that you've done pretty well in the first half of the year on the EBITDA per ton front, do you want to revise that guidance? Point number one. The second factor is on volumes. At the halfway mark, you're a little negative, but you were talking about 6 to 8% growth on volumes. Do you want to revise that number downwards? Go ahead.
Yeah, good question. As far as volumes is concerned, we have said that we would always like to grow ahead of the market, and which we have done. We have grown ahead of the market as far as India is concerned and the rest of the world. Whereas we have not done that with respect to the AMET region. The drop in volume has been primarily driven by the drop in volumes in the AMET region. As far as India is concerned, we have grown in the quarter by 8% and 5.5% for the entire first half. Similarly, we have grown rest of the world. Of course, this is vis-a-vis the same period last year. As far as the rest of the world is concerned, we have again grown by about 2.4%. Whereas in AMET, we have declined by almost 19%, largely caused by local challenges as far as Egypt is concerned, which includes...
Mr. Shekhar, so just request you to hold on. We're just having a bit of an audio glitch. We'll just, try to sort that out. Just to tell our viewers, the numbers look good. The margins expanded on a year-on-year basis. On a sequential basis, there was some pressure. They've given out a presentation, as the management said, the AMET region. That's the one that is struggling for them. And volumes, that's why, are a little bit lower at the halfway mark.
That's the Africa, Middle East, Turkey.
Yes.
That is the AMET region.
AMET region, yeah. About. So that's the one that is struggling. It's down, I think, 19% at the halfway mark. But Mr. Shekhar is back with us. Sir, you were giving us, we have got your presentation late last night. You have uploaded it on the BSEM. And we've got most of what you're saying. We are asking you from here on, how does things shape up? One is on the volumes. Do you want to revise the volume estimate downwards? And do you want to revise the EBITDA estimate upwards? Go ahead.
Yeah. So we would be very happy to be equal to the volumes of last year. However, we are optimistic that we would grow by maybe about 2 to 3% as far as the whole year is concerned vis-a-vis last year. That is what we would like to do. Of course, the caveat is with respect to the challenges in the developed markets due to the recession, where consumption has been in stress. Okay, and we are again cautiously optimistic as far as India is concerned, though we have grown in India by almost 5.5% for the entire first half. We have to grow in a similar or more as far as India is concerned for the rest half to be able to maintain this particular aim. As far as EBITDA is concerned, as I said, EBITDA has been a function of the first half in terms of product mix, one. Number two is the volumes, particularly the performance surfactants in the mass and masstige segment has had an impact. And third, of course, the currency depreciation, the rupee from almost 76, 77 to today 80, 83. All these have contributed to the EBITDA number. And as far as the entire year is concerned, we would expect for this particular year, maybe to land at EBITDA per ton at 21 to 22 for the entire year. But over the next few years, we would say the EBITDA would be determined by, again, the growth in volumes. Okay, so the important thing is, as performance surfactants grow further, the EBITDA may correct itself to whatever we had indicated as a guidance in the previous quarters.
So, Mr. Shekhar, just on volumes, clarification, this AMET region, right, Africa, Middle East, Turkey, it's seen a steep fall. I mean, it's over 19%. Do you think in the second half of the year, how is the situation on the ground? Do you think this double-digit fall is something that can continue, particularly for this region? Or are you seeing the worst already?
Yeah. We went through a similar cycle, if you remember, in 2019. when the Egyptian currency was depreciated by almost 100%, from something like 8 per dollar to almost 15 per dollar. As far as this year is concerned, the depreciation happened from 15 to 19 over a gradual 4 or 5 months. However, there has been a sharp depreciation from 19.5 to almost 23, 24 in a matter of 15 days. Okay. Now, something similar we had seen about 3 years. So we believe that the decline has bottomed out, and we are hopeful and optimistic that from here on, the Egyptian market will grow. But however, the consumption has been severely impacted by this currency depreciation, in high level of inflation, as well as down trading.
Mr. Shekhar, hi, good morning. Just a couple of clarifications. I heard you say volume growth of 2 to 3% for 23. Is that correct?
That is what we would like to aim for as far as this 22-23 is concerned. As you know, we are already down by almost 4% as far as the first half is concerned.
The last number I had written down.
And I did tell you a caveat with respect to the consumption, because the concern is the recession and the inflation, both in India as well as the rest of the world.
Got it. The last number I have written down is around 6 to 8% volume growth. For
you're right, absolutely right.
So you're cutting your volume growth for what you see from 6 to 8 to 2 to 3 for 23.
Yeah, we would be happy. As I said, we would be very happy to retain the last year's volume.
Okay,
at what is called the realistic level.
That's clear.
At the optimistic level, 2 to 3%.
And EBITDA is 21. You see 21 to 22 a kilo.
Yeah, the entire year is concerned.
Okay, for the entire year, FY23, and broadly, what I can understand what you're saying is that there was pressure already in this Africa, Middle East, Turkey region, and now developed markets are also seeing a fair bit of stress. So that is basically what is causing all of this for you.
Right.
Okay, all right.
Can you tell us what does all of this mean for your cash flows and your working capital cycle? Because is there any high-cost inventory at the moment? If this is the kind of pressure that you're facing already and you're scaling down your volume guidance, will it put more pressure on the working capital cycle as well as the cash flows?
Very interesting question. See, what is happening, of course, is that the huge commodity rise in prices that we saw in the first quarter of this year is now coming down. We have seen the normal coal prices correcting significantly, one. Number two, the freight rates again have come down sharply, though they have not gone to the pre-COVID levels. So, in the previous periods, we did plan for extra inventory given the uncertainty with respect to the supply chain and logistics. But now with more predictability, we are able to plan better, and the inventory in terms of number of days will start improving and correcting themselves. So as far as cash flow is concerned, no, we have not had any, major aspects of it, given that, we have performed well. This was particularly the entire, first half, as you would see, was a pretty stable half as far as we are concerned. And so the inventory will correct itself, in terms of the number of days. Yeah.
All right. Mr. Shekhar, we'll leave it there, and hopefully things will incrementally get better and the next time we speak. Thank you very much for joining us.
Thank you very much. Thank you.
Thank you. Perspective. Thank you. And some of this is...
again is the global effect, right?
Yeah.
The slowdown that we're seeing in global markets.
You can look at Tata Motors, for example. You can look at Bajaj, because they're operating in Africa as well. Yes. And we've heard that repeatedly. The currency move and stress demand-wise for some of these global regions. But it's so different for different areas. You look at truck sales out of the US, North America, Class 8 truck sales, which we track. Those are doing just fine, right? So very, very tough with global businesses. And